All right, there we go. Welcome. Let's officially start, right? Let's officially start today's session. Welcome to today's webinar titled The Successful Investor. My name is Brian D'Amico. I'm really excited about the webinar because what I'm going to do in today's webinar is I'm going to show you how you can be buying and selling stocks to, let's say, consistently average 15% a year. There's going to be some years that are better, some years that are worse, but we're going to target an average of 15% per year. We're going to be focusing on the techniques of just buying and selling stocks. We're not going to get into fancy things like options trading or heavy-duty technical analysis. We're going to be focused on just becoming really good at buying a stock and selling it at the right time. All right, so I'm excited you're here today because this information has changed my life, and I've seen it change the lives of hundreds and hundreds of people over the 20 years that I've been working here at VectorVest. So you're definitely in the right spot today. One of the things that I did want to say here right at the beginning is that it is so important that you learn this, because until you know how to take control and make money in the stock market for yourself, you're going to be at the mercy of outside forces, like what the Fed does, how much they devalue the currency, how much, with inflation, what the government says you can get with your retirement, when you can get your Social Security here. If you're in the United States, it's called Social Security. You want to be the one in control. And my promise to you today is that you're going to see how you could safely and steadily grow your account each year without taking unnecessary risk. And you'll have the confidence of knowing when to buy and sell. All right. If there's kind of like a key underlying theme in today's session, it's that your system is the thing that's going to determine your success. And anytime you hear me refer to a system, the system involves three main pieces: when to buy, what to be buying, and when to sell them. And we actually broke today's webinar down into those three areas. All right, so if you're good now, if you're doing well, you'll get better. If you're unsuccessful now, or maybe you're struggling, today's webinar, I can guarantee, will help you turn that around so that you can become a successful investor. All right, if you want to put a face to a name, that's me, Brian D'Amico. I work here at VectorVest. I've been here for over 20 years. In fact, VectorVest has been around a long time. VectorVest has been around since 1988. I'm part of a bigger educational team at VectorVest. We all are dedicated to helping you become a more knowledgeable, successful investor. All right, I'm confident that everything that I'm going to be showing you today will help, because it's helped a ton of other people just like you and me. Now, when people first come to us, and in the chat box, let me know, are you familiar with VectorVest? So like yes or no. Like, are you currently using VectorVest or no? And if you say no, that's fine. We'll still let you stay in the webinar. All right. So I'm not going to be mad at you if you say no. But in the chat box, give me a yes if you're currently using VectorVest, or even if you're on a trial. Kind of let me know where you stand with VectorVest right now. So I see a bunch of yeses coming through. I see Julie says, yep, I'm a subscriber of VectorVest. Derek says no. That's fine, Derek. So I see a bunch of yeses. All right, that's cool. Like, even if you say no, like VectorVest, if you want to try out there's a software that VectorVest provides you. There's always a way you can get a trial to VectorVest later on at the end of the webinar. I'll point you in the right direction if you want to take a trial to it. But I just want to get that feel right now. But we got a bunch of people here. I'm about to say a few things. If any of these things sound like you, in the chat box, let me know. Like, say, hey, that I've been there, or I'm there right now. Because we have people coming to us, each and every day. We've had, a million people over the years use the VectorVest service, believe it or not. When people come to us, a lot of times we hear them say things like this. I'm a little frustrated right now, and which is why they're kind of looking for a solution. They say, I'm a little frustrated right now because I feel like my account's going nowhere. I'm just kind of like spinning my wheels with the market being up and down. I'm not really going anywhere. Right? Or, I'm a little bit worried because I feel like I might not have enough money to retire, and I might have to scale things back a little bit and live an ordinary life in retirement. I don't really want that. I don't want to be dependent on other people. Yeah, Gigi's like, that is me. Robert with an exclamation point says, that's me. Yeah. But one of the things that we do here is people say they don't necessarily want 300 million% every year. They're like, I just want to consistently grow. Like I want my account to just like a snowball, just kind of getting bigger and bigger and consistently growing each year. That way they could start to feel confident in themselves. Like they can look themselves in the mirror and be confident that they know what they're doing and that they're able to take care of themselves, and not just themselves, but they're able to provide for the people they love. So we hear all those things, and I want to be able to give that to you by teaching you the things in today's webinar. And I'm guessing part of that is why you're here today. So over the last 20 some odd years, I think I've seen, and possibly I can pretty much guarantee I probably made all the costly mistakes out there, but I know the things that work consistently. And my goal today is to show you how to fix those mistakes. All right, so we're going to be looking at some main things in today's webinar. We broke it down into this flow. We're going to first look at the exact criteria that you could be using, or should be using, to pick the right stocks. That way you're not sitting there thinking, oh, what should I be looking for? Or, did I pick the right one? We're also going to then change over to 3 keys to be buying at the right time. Oh, something's chiming on my computer for some reason. Hold on one second. I don't even know what this... Our company set up a new phone system. Hold on one second. I can't even turn it off. Let's see. How do I turn this off? I think I got it shut off. Did you guys hear that ringing? Or is it just me? There was some ringing going on. I'm like, what is going on here? Like, so our new phone system it's one of those things where our company set up something where you can receive phone calls anywhere on the planet. You can get that way, with all the people who might be working from home. So they installed the software on all of our computers, and it just started ringing. So anyway, Rob's like, I thought I had audio problems. Me too, Rob. All right, let's get back to this. Where did we leave off? All right, 3 keys to buy at the right time. And then the next thing is the third main section is the all-important when to sell. And today's webinar, the way that we put it together is not just on hypothetical things that we think might work. It's built on results. Right? It's built on results from actual people who are using the techniques, not just us, but the people that are using these techniques, such as Ross, who went from being his trading and investing was haphazard and time consuming, and he was getting below average results, to where after learning the system that you're going to learn today, he was making 33% in his first 6 months. And he was doing very little trading to do that. We're going to look at Tim, to where he felt like he was trading in the dark. Like he didn't know, he bought a stock, but he didn't know what to do with it after that, to where after he learned the system, he was on target to do 30%. And then Kamel, he was making all the possible mistakes, which we'll talk about later on. He said his trading was stupid and undisciplined, to where he learned a system to become disciplined. And that first year, he was up 22%. All right, we're going to be focusing on that system today. So now's a great time to turn off those distractions. Before we officially started, those of you who are here early, I was asking you to do this as well. But turn off distractions. If you're trying to multitask with email or whatever, just don't do it. Just focus for 1 hour. All right? Quick notes about today's webinar before we head into the first section is it is very interactive. So I will ask you a lot of questions throughout today's session. Please interact back. We get so much more enjoyment out of it. And we learn so much more when we interact back and forth. And, of course, we've only got about an hour today. So in today's session, there's only so much we can cover. At the end, what we'll do is if you want more help, I'll try to point you the best I can in the right direction based on where we are at that point. So if you're good with that, give me a quick yes in the chat box. That lets me know that you are ready to go. While you do that, let me grab a quick drink. Gigi, you're the first one in, Gigi. Yes, I see Derek and David. Yes, all yeses. So let's hop right into how to pick the right stocks. When we're talking about picking the right stocks, the first thing I do want to mention is there's a lot of techniques out there on investing. There's short-term trading, there's swing trading, there's day trading, there's position trading, there's options trading. What we're going to focus on is one technique that we call the successful investing technique. We're not saying that there, other techniques out there are bad. They might be more complex, or more advanced, but we're not saying they're bad. You could do some of those other things and make money, but if you're struggling or you're kind of trying to get things right and become more consistent and relax a little bit more and not be tied to your computer, then we're going to be focused on the successful investing techniques, which is what we're going to be talking about here today. All right, so how do we pick these types of stocks? Well, just because a stock might be a well-known company, it doesn't mean that you should own it. There's going to be a right way and a wrong way to choose these types of stocks. So first off, here's an example of a stock that you might think is good to buy, but after you buy it, sometimes what happens is it either goes sideways or it comes down, and you're left wondering what on earth just happened, because you thought you did everything right, but it didn't work out. So let's talk about some of the problems and then talk about solutions. Well, problem number one is, you were just buying stocks that are going down. Problem number one is you're buying stocks that were already going down. And what you're looking at here is, let me get my laser pointer out, is this is just the same stock, except I just showed you this part before. And with this type of stock, I zoomed out so you could see a bigger picture. Most investors have been trained to buy stocks that look like this. You might hear advisors or people on TV say, hey, let's get in here and let's ride this thing all the way back up to its former glory. Well, stocks that are going down, and I want you to remember this, a body in motion tends to stay in motion. So stocks that are going down typically continue to fall. Problem number one is you are buying stocks that are going down, and that's why they go down after you buy them. Now, problem number two is you buy just for the dividend. Now, my co-coach, Todd Schaefer, he's here with us tonight. He's answering questions in the chat, by the way. He and I meet with people every Thursday. By the way, today is Thursday. We actually had our coaching session with our clients a few hours ago. And most sessions, people will, when we talk to them about their stocks, almost without fail, some people will say, oh, I was thinking about selling this stock, but it pays such a great dividend. Dividends are good. We have no problems with dividends, but I want you to think about dividends as a nice little added bonus. If you focus just on the dividend, that's a problem, right? If you're just buying a stock because it pays a nice dividend and you're not looking at anything else, you could really be setting yourself up for failure. Because what happens a lot of times is people will sit on that stock and watch it go down 30, 40, 50% or more, and they'll say, but, I'm getting that 3% yield. In this example that you're looking at on the screen is a stock that paid an 11% yield. But this stock dropped 60%. And here's the key thing. Here's the problem. If you are continually making a trade-off of getting a 3% yield but suffering a 30% loss, well, you're never going to consistently outperform the market. Or you're never going to grow your account if you keep making that trade-off. And then problem number three is maybe you're just buying because of the company name. That's not going to work out. Right? Because maybe you got into investing and you didn't know everything, so you went out and you went, oh, I like the Walmarts, the Disneys, or whatever. And you just buy them because you know them. Windstream happened to have been my phone and internet provider when I moved into my house here in North Carolina. You might say, oh, that's a pretty big company. Let me invest in that. But just because a company is well known, it doesn't mean that it's the right stock for you to own right now. But the real problem is not necessarily 1, 2, or 3. Those 3 things I just mentioned. The real problem is this. The real problem is you didn't have any buying criteria. And if you don't have specific buying criteria to look at, you're always going to be left asking yourself, what should I really be looking for? And if you don't know what to look for, the stock market will give you a lot to look at. And you will spend hours of your life digging through the data, and you're still left wondering if you picked the right thing. Right? You're still left wondering, did I pick the right one? For example, my wife asked me to go get a pineapple. And you know how in Walmart there's those big bins of fruit? I would go over and I'm like, oh, this one looks good. Pick a pineapple. What did I know, right? I pick a pineapple, but she looked at it and she did her little tests and she's like, no, this isn't a good pineapple. I'm like, what are you talking about? And apparently there's like a test, like you have to sniff the bottom or squeeze it or whatever. And the point is, I thought I picked the right pineapple, but I didn't, because I didn't have the right buying criteria. And picture this, I would have gotten home, started eating the pineapple, and let's say it tasted bad. Do you think I would have blamed my pineapple picking abilities? Or do you think I would have blamed anything else? Like, oh man, that Walmart must have bruised it. Or, it was a bad crop or whatever. I would have blamed everything else but my pineapple picking abilities. The same thing is true with stocks. If you don't have the right buying criteria, you could buy a stock and it could go against you, and you're not going to blame yourself. You're going to blame the market gods or against you or whatever. Right? And if you don't have the right buying criteria, you end up buying stocks and then holding on to bad trades too long, and then you'll eventually start to say things like, I'll hold on to it. I can't be wrong. It'll come back. I picked a good pineapple. It'll taste better tomorrow. Right? So let me give you the buying criteria that you need to be using for your stocks. All right, so I'm going to have you write it down first, and then we're going to look at some examples, and then I'm going to test you. I want to make sure that you understand. Draw out a little triangle on the screen. Not on your screen. Definitely don't draw on your screen. On a piece of paper. The 3 criteria that we're looking at, and they go together. Like they it's not independent. I really should probably, what is it called? A Venn diagram. I probably should have drawn 3 interlocking circles, because there's some overlap. The first one is earnings, then there's safety and trend. Earnings, safety, and trend. So let's talk about each one. If you're going to be looking at earnings, and we really feel you should be, there's 2 things you want to make sure to have in the stocks that you're buying. That the earnings are rising, and not just rising, you want to make sure that they're positive. All right, you don't want them just to be getting less and less negative. You want them to be rising and positive. Now, when it comes to safety, well, how are you going to determine safety? Well, you want to look over the past several years. So we always start with a 1-year chart, but then we don't stop there. We stretch that chart out. We say, all right, well, how has it done over like the past 3 or 5 years? And we're looking at things like the price trend. We're looking at the volatility of the stock, how much it goes up and down. We're looking at the earnings. We're not just looking to see if earnings have been rising over the past few months or the past year. We're going to say, all right, well, have earnings been rising over several years? So that you could see the overlap there. And then we also want to see that the stock ideally is undervalued. Now, there's going to be times where you might buy a stock that is overvalued, because that's just kind of where we are in the market phase. But let me just say this. If you had 2 stocks and everything else was identical, you're going to favor the one that is undervalued each time. Okay? Now, when it comes to trend, there's 3 things you want to look at. First would be that the price trend is smooth and steady. Not only smooth and steady, but it's smooth and steady going up. All right, so it could be smooth and steady going sideways, right? But that's not good, because it's not growing. You want it to be smooth and steady going higher. And the way that you know that is that it's hitting higher highs, like this. Higher highs, higher lows. All right? Let's look at this visually. So here's a stock chart. I took off the ticker symbol. That way it didn't sway you. This is ideally what you'd want to look for. And then, by the way, I'm going to be showing you 5-year charts just to save time. Understand that we always start with a 1-year chart and then we expand it out. But for time purposes, I'm going to always start with a 5-year chart. But you could just say, all right, well, what did it do over the past year? And let's just say it's there, and that's another year, that's a year. So you get the idea, right? So what you want to start with is say, just get a feel for the smooth and steady rising nature. And think of, how in math you could draw like a 45-degree line. You want the price to be hugging that as closely as possible. You don't want to find a stock that goes from down here and then several years later it's up here, but in the middle it does something like this. Right? Right? You don't want that, because you're not going to sleep at night owning a stock like that, and I bet you're not going to hold it for any length of time, because as soon as this thing starts to fall, you're going to be like, uh-oh, is this going to happen again? And you're just worried. Whereas if you have a stock that is smooth and steady and it's going higher and it starts to pull back, you're like, oh, that's all right. Or it tends to go higher. But no, by the way, you're still going to have stops in place, which we'll talk about later. But you have that confidence that this stock will most likely continue to move higher over time. The other thing that you'll notice is when I drew those 1 year periods, each year it ended up higher than where it started. That's another thing that you want to look for because it gives you that confidence that if you buy it, most likely, probability is on your side that over time it's going to be higher than when you bought it. We're not saying that you should buy and hold it for a year, but you want to put that probability on your side. Now, what's going to help the stock prices go higher over time? It's earnings. And I think about 90 to 95% of you said you are using VectorVest. So you have this same earnings number available to you. If you don't use VectorVest, that's okay. You could, if you wanted to, you could take out a trial if you want. But let me show you what we've got. The main thing to understand is no matter where you get your data, you want to look at earnings to be rising. I happen to feel, and a lot of you feel, that VectorVest has a great earnings number, and it's very easy. You just look for this earnings to be going higher like that. It's very simple. This is a forecasted earnings. It's like a flashlight into the future. We say earnings is the engine that drives stock prices higher. A company needs to have rising earnings and growing their earnings for that stock price over any length of time to go higher and higher and higher. All right, so you need rising earnings over time. All right. Do you remember that stock we looked at earlier, Windstream? Well, I used this as an example, not just because it was my phone and internet provider, but because it was a real example from a real human just like you. This gentleman, his name is Steve, and you can see that up in the top corner over here. Steve came to a coaching webinar, kind of like what I described that Todd and I do every Thursday. We do that at noon. And he came to our session, and you can see he typed in his question a little bit before our session started, like 11:49. And he said, what do you think about Windstream? I just bought it 2 days ago. And if you look down here, do you see this down here? The webinar was on the 19th. 2 days earlier was this last green up day. Have you ever done that where you bought and right after you buy, the stock just drops and drops and drops? Right? Earlier, Gigi said, hey, that's me. And just typed in again many times. Well, picture Steve. That's where he is. And he's like, man, I'm on this webinar. Let me ask these guys what they think about the stock that I just bought. I just bought it 2 days ago. What do you guys think? You can kind of almost feel his hesitation in the question. I've just bought it 2 days ago. What do you think? Well, what we did with Steve is we didn't use our own super analysis, right? We said, let's just go back to the criteria. Let's sniff the pineapple. Let's see if it passes the criteria. So we pulled it up on a chart and we said, all right, well, it's in a downtrend. That fails that test. Earnings falling. It fails that test. It is over its value. So it met none of the criteria. So it's up to Steve on what he wants to do, but he typed into the chat box, I'm selling it now. Basically, he's returning the pineapple, right? And it was a good thing he did because it dropped like 10% the next couple of weeks, and then it dropped like 60% over the next few months. And just for fun, I went back and I looked, years later. And years later, I found Windstream actually filed for bankruptcy. And at the time, it was trading at 20 cents. And I think since then, it's actually delisted. It's not even trading anymore. I think they went under some changes. I think they're called Kinetic now, maybe. But imagine if Steve never sold it. Maybe you're in that position now where you bought a stock and it fell and you're just kind of waiting for it to come back and you're getting very hopeful, right? And it's in your portfolio and then it drops again and you're getting hopeful and then it drops. And you look at your portfolio right now and this thing in your portfolio is like a negative 50%, negative 60%. And if you're staring at these things every day, it really just brings you down. And it's like a constant reminder of that you're doing something bad. So you don't want that. That's why one of the things that we teach people to do is weed their portfolio. That's one of the first things we teach people to do. So let's do some preventative measures. We want you to start buying things that look like this. And in a moment, I'm going to test you to see if you can identify stocks that look like this. you don't really have to pay attention to the ticker symbol, but these are stocks from we have a paper portfolio that we track with our clients. I pulled a few examples just to highlight here. Don't necessarily, like I said, don't get hung up on the ticker symbol, but notice smooth and steady. Even when it pulled back, it was kind of smooth and slow, and then it started to go back up again. It had rising earnings. This one was in a couple of months, a 25% gain. So we have preset entry and exit rules. It allowed us to get that 25% gain in that couple of month period. Now here's another one. Again, smooth and steady going up, kind of pulled back. And this is something you'll learn a little bit later in today's webinar. There's an area of resistance here. It popped up above the area of resistance. We bought. There was a 15% gain in about a month and a half or so using our entry and exit rules that we're going to be talking about later on. All right. And then lows here, a beautiful smooth chart, right? Smooth earnings started to rise here. Now earnings is really taken off now, but it was a 23% gain in a few months. Right, the point is, I mean, there's a ton of stocks out there. It's not just a handful. There's a ton of them out there that meet this criteria. And when you combine that with the right entry and exit rules, you're able to stack winners like this over time. And now keep in mind, on the ones that don't work out, you want to minimize your losses, which we'll talk about later. That's how you're going to be able to consistently grow your account each year. So let's do this together. I'm going to show you a few charts, and I want you to, in the chat box, just write a yes, a no, or a maybe. And you're not deciding to buy the stock today. You are just kind of building a list of possibilities. Remember, 5-year chart here. This is a 5-year chart. Does this look like something you would want to add to your portfolio? Paul, Juan, Charles, everybody's saying no. Yeah, I want to start with an easier one. Right? Don't get I don't want you ever to convince yourself like, oh, look at this, it's starting to come back up over here. It's starting to come back up. Don't do that. You see this, you move on. Right? Move on. How about this one? Remember, 5-year chart. So like this side is probably what, 1.5 to 2 years of that. Yes or no? Richard, but I don't know if Richard, you're saying this. He's like, no way. All right, so the thing that I think a couple of you might be saying maybe about is because they had the rising earnings, right? But look at this. This is 2 years worth of a downtrend. 2 years, right? That's more than just a couple of days. We're going to skip it. You want to know why? Because you'll find things like this, right? Look at that. Just like, you ever go to the eye doctor? Here, let me do a test. Example 2, example 3. Which one looks better? 2 or 3? 2 or 3? And aren't you going to say 3 every time? Yeah, so if you're going to be able to do this in like 2 or 3 seconds, you're going to eyeball it and be like, oh, that looks good. And then you flip to the next one, you're like, that used to look good, not anymore. And you'll also say, well, also earnings is falling. That's not great. What about 5? 5, is that a yes, no, or maybe? Yeah, you see how, if you could see my chat box, it flew by with yeses. This is not the same stock as number 3. That's just more proof that there's a lot of stocks out there that do this. You can find them. And when you do this, when you use this buying criteria, would you be more or less confident? In the chat box, let me know, more or less confident. You can just say more or less. Yeah, it's all more. More. And that's important, and you need to listen to this part. A big part of being a successful investor is your confidence level. Your confidence comes from a system that you believe in because you know it works. All right? Do you remember Ross from earlier? He had sent me an email recently telling me about his journey on his way to become a successful investor. He had said that he had already had a lot of experience as an investor, many years of trading, but he had no system, right? And he had spent a ton of money on newsletters, and he ended up having a haphazard system. It was time consuming. He was over trading, but he was determined that he wanted to turn things around. So he took training like you're going through here. He actually even took one of our more in-depth classes that we teach called the Successful Investor Course. So he went even more. Now he said he committed to following the system. and he built a diversified portfolio. But how did he pick those stocks? He said he focused on safety and earnings, just like we were just talking about. In 6 months, his portfolio was up 33%, just following those simple rules. And it started with picking the right stocks. He's only spending 15 to 30 minutes a night. He's more confident and relaxed. And this is a cool thing, is he's having fun. He's having fun investing again. All right, so let me ask you, one of my jobs today is to help you make a few shifts. If you came to this webinar and you were uncertain about the stocks you were picking, the first shift I want you to make is to go from being uncertain to decide right now that you're going to start to use some buying criteria so that you can pick some high probability stocks that are more likely to go up. Because the way that you pick your stocks is one part of your system, and it's needed to help you average that 15% per year. All right, so make that shift now. All right, section 2. Now that you know what stocks you want to buy, you've got to know how to buy them at the right time. If you just follow the old philosophy of, hey, buy anytime, today's as good as tomorrow, that turns into buy and hope, because you might buy something and then you buy it at the wrong time, the market's falling, and now you're sitting there looking at a 5 to 10% loss, and you're like, oh man, I'll just hold on to it and hope it comes back, right? That's a buy and hope philosophy. But you could buy at the right time and steadily grow your portfolio using certain strategies that we're going to look at. It's been difficult over the past year or two because we've had some wild swings in the market. This is a picture of what it was like in 2020. But if I were to put up a chart of 2021 as well, we've got the same types of things going on right now, right? We've got lots of news events, let's just say, right? Just when you get in, it feels like the market reverses. And you start to feel like you're on some sort of evil portfolio roller coaster ride. And every time you're in the market, your gains are small, like, when you're going up the roller coaster, click, 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 click. But then when the market pulls back, it's a gut-wrenching downturn. And eventually start to second guess yourself, because you get in and the market turns around. You're like, well, the next time I want to get in, I'm not. And you ignore your buying signals, but then that's the signal where the market actually goes up. And then you're like, oh, man. And then you start to blame everything. All right, so let's talk about some of the key reasons, again, why stocks that you're buying are going down after you buy them. One of them we talked about earlier, so I'm not going to go into a lot of detail on this because we just talked about one of the big reasons why the stocks that you buy go down is because you just bought a bad stock. Why did the pineapple taste bad? Well, you picked a bad pineapple. All right, maybe the stock was in a downtrend already. Maybe it was too volatile. Maybe it had bad earnings. Whatever, it was just a bad stock. Problem number 2 is maybe you're just following bad advice. Right? Maybe you weren't confident in your own ability, so you turned to the gurus on TV or maybe an advisor. And I'm not saying advisors are bad. I bet a lot of them have the best intentions. Like they probably they want you to be successful. But a lot of advisors are just following the same philosophy that they've been taught, which is to buy stocks anytime. It's always a good time to buy. Wherever you get your advice, most of the people teach it's always a good time to buy. Again, they don't have evil intentions, but they just gave you that advice because that's what they've always been taught. And then problem number 3 is maybe you feel like you've got this rain cloud over you and you're cursed by the market gods. If you've ever said that statement like, oh, the market gods are against me, or there's somebody waiting for me to hit the buy button and then they sell and the stock goes down. If you're blaming these other things and you feel like you're cursed, well, there's no such thing as bad luck, but you're creating your own bad luck because you tend to then start to do things in reaction to what you think is bad luck, where you get into a stock and the next day the stock, the market and your stock may be going down and you're like, oh, here we go again, and you sell it. Well, maybe it was just a one-day downturn and it reverses and it goes back up and you're like, oh man, the market gods are against me. And then you buy back in like 2 weeks later after it's gone back up. It's just, you're causing your own bad luck. But the real problem is you just got in at a bad time. It's timing. Timing is everything. There could be ups and downs in the market, but you could still get in at a more opportune time with good signals. It'll be like you need something that kind of flashes, like, hey, Here, enter now. And you know what? If you have one of those, if you do not see that signal, you know what that means? It means don't enter. It's the same thing as a do not enter sign. Right? Do not buy. Now, the one of the key thing to understand is it doesn't mean to sell everything. It just means don't buy. Here's 3 keys to be buying at the right time. 3 keys to buy at the right time. The first one is the biggest, and that is to make sure the market is in an uptrend. Because a rising tide lifts all boats, right? You could, when the market is going higher, if you buy a stock when the overall market is in an uptrend, you increase your likelihood for success. However, if you continue to buy as the market is falling, the results could be disastrous, right? Now, here's an example from the global financial crisis, but we heard the same exact thing last year during our government's responses to COVID, right? So here, Robert, during the global financial crisis, he had just retired, and he was using some professional advisors to help him, and they were telling him, hey, let's ride this out. So he was basically buying stocks still, buying and selling as the market kept falling and falling and falling. He lost over 40% of his retirement. He thought his retirement was in ruins. He'd have to go back out and get a job. All right, so we don't want that, obviously. Now, here's a look at a 20-year look at the market. And this, here is that 2008 global financial crisis. One of the points I'm trying to get across here is that the market has trends in it. So people who say that the market doesn't trend, they're obviously not looking at the same thing here. Now, this was a big multi-year downturn. This is a multi-year upturn. This is a downturn. This is a longer upturn. But within each of these longer waves, there's ups and downs. So how can you start to stack probability on your side? Well, the key is you just only buy when it's going up. Don't try to nail the bottoms. Use a signal that says, hey, today the market is moving higher, like it's in an uptrend. Not just that day, but it's in an uptrend. And then when the market's in a downtrend, you're not getting those signals and you just stop buying. So for example here, if you were in the market and then the market started to turn down, you stop buying, and eventually you're selling your stocks that meet their stop criteria, and then eventually you're in cash. You don't have to suffer this big downturn. And then when you start to get the buying signals again, you start to reap all the rewards of this nice upturn. All right? Well, how do we do that here at VectorVest? Let's zoom in a little bit. Now, by the way, if you don't use VectorVest, you're probably going to be using something like a moving average, where the short-term moving average is above the longer term. It's not our favorite because it sometimes is a little slow, but it also doesn't give you that daily signal. Like today's Thursday, right? You need to know, hey, Thursday, even if the short-term moving average is above the long-term, is today a good day to buy? And then when Friday comes, is Friday a good day to buy? You need a signal that says, day over day, are these good days to enter? And that's what we do here. We have a thing here at VectorVest called green lights. Right? We have a thing called green lights. And I want you just take a step back and notice one thing. When the market is going up, green lights appear. When the market's going down, no green lights. When the market's going up, green lights. When the market's going down, one of them snuck in there because there was this little pop right here. Sometimes that happens. But overall, you're getting only green lights during uptrends. That helps you because you're only buying when the tide is lifting. And when the tide is going out and falling, you're not buying anything, and then eventually you're selling things, and then eventually into cash. All right, so key number 1 there is the market's got to be in an uptrend. Number 2, you got to make sure the stock is in an uptrend. And we did talk about this earlier. You want to make sure the stock is already doing what you want before you buy it. And let's go back to that Windstream example. I'm going to show it to you again because it's a great example of a mistake that people make. This stock was clearly in a downtrend. Now, Steve didn't see it, but Todd and I, when we talked to him, we said, all right, Steve, let's draw something here. We connected the highs. We said, this is hitting lower highs, and it was also hitting lower lows. But we said, Steve, the day you bought it, it was right at that trend line. And I said, all right, usually it falls from there. It showed no evidence of going into an uptrend. And remember, an uptrend is higher highs and higher lows. All right. So you don't want to buy a stock that's in a downtrend. Instead, you want to buy a stock that's in an uptrend. The way that you see that is it's hitting higher highs, higher lows. Why is that important? Well, if historically you see uptrends in a stock are clearly defined, then when it is no longer hitting higher highs and higher lows, and it's hitting lower highs and lower lows, you say, hey, now's a downtrend. I will wait until it starts to hit higher highs and higher lows, and then you look for an entry in here. All right? So you need to find stocks that are clearly in an uptrend. It's a lot harder to identify that on a stock basis if the stock is like this, right? That's another reason why we look for smooth and steady. Okay? Number 3 is it's got to be clear of resistance. Now, this one doesn't come up all of the time. Right? It doesn't come up on 100% of your trades, but there's this thing called resistance, and think of it like a ceiling. Right? A ceiling. If you bumped your head on the ceiling, like, poof, and you'd fall back down, right? Same thing with a stock. If a stock is going up and going up to resistance, a lot of times it will hit it and fall back down. What you want is you want to only buy a stock that has broken up through resistance like this stock did here. Here's a couple of examples. This was a great looking stock, right? Pretty much smooth and steady going up. Well, it fell out of favor right here. It came down. The mistake a lot of people make is they see it starting to rise again and they buy it. Let's just say they buy it here. Well, why is that a mistake? Well, it's a mistake because that's near resistance. And if you're not familiar with what resistance is, I want you to think of it this way. People, let's say they either bought the stock here or they owned the stock back there, and then the thing fell. And they're saying to themselves, if it ever gets back up to there again, I'm just going to sell it. So it starts to come back up. Even it came up here, here, and then I got all that selling pressure. So it's falling, it's falling. It got close again. So what do you think is going to happen here? Well, it wasn't able to overcome all that selling pressure. And this time it fell pretty dramatically. So you want to avoid buying stocks that are near resistance. Instead, you want to look for something like this where you've got a really good company with, look at this earnings. Gorgeous, right? Fell out of favor, but it started to come back, but then it fell. So here's that important part where people are thinking, well, if it ever gets to there again, I'm going to sell. Look at it again. It's right here. But we want a full candle above that. Think of it like a gopher. You know those little, or the ferrets or whatever, prairie dog. They poke their head up and they're trying to see if it's safe to come out. They're trying to overcome all that selling pressure, right? The stock is trying to overcome that. Boom, it did, right? It popped out. It's free. The prairie dog's able to run around and the stock's able to go higher. So you want to be prudent and wait for a full candle above resistance. All right, so those are 3 keys to buy at the right time to help you make sure you're buying at the right time. Let me ask you, what percentage of the time have you made sure to look for all 3? In the chat, let me know. Just guesstimate. Is it 100%? Do you think you do it about 50-50? Are you like close, maybe like at a 75? Or you're at like 0? Like, do you never make sure to look for all 3? Paul says 80. David says 75. Gregory's like 60-40. 75-30 from Dan. 50 from Derek. Gigi just is like, I just don't look for all 3. So that'd be like a 0, right, Gigi? 40. Inconsistent. Yeah. So the key is we want to, if it's anything less than 100%, there's some work to do. We need to get it up to 100%. Do you remember earlier I was talking about Kamel? He said he had no discipline in his trading. Right? He had no discipline. Listen to this. He would buy falling stocks in down markets. And not only that, he said he would do it on down days. So that's like the trifecta of doing things poorly. Like he didn't know it. Like he thought he was trying to nail the bottom. But he was buying these things on falling stocks, on down markets, on down days. And he was sitting there as they continued to fall. He was just hoping that they would come back. After doing this for a while and losing, he started to question his ability to invest. Have you ever been there? Maybe you're there right now. Maybe you're in a position where you're like, you know what? I don't know if I could do this. I'm guessing maybe you're not right now because you're at today's webinar. And first off, I congratulate you for doing that. You said, you know what, I'm not gonna stand for this anymore. I'm gonna get better. But that, Kamel was at a spot where he's like, I question my ability to invest. But he said, you know what, I'm gonna turn things around. He's doing he did what you did. He took a webinar saying, I'm gonna fix things. And I loved it because Kamel would then come to our coaching every week, and he would send me emails. He would take his cell phone out and take a picture of his computer screen. And he's like, hey, Brian, look at this. My portfolio, this is a retirement portfolio. He's up 22%. And then he started to track multiple portfolios. He's like, my other portfolio, it's up 44%. So he would take these pictures, and then he'd send me another picture saying, look at this, Brian. And here's a key thing. I know it might be hard to see. Kind of lean in a little bit. 11 winners, 10 losers. He's not 100% winners. He's 50-50. But the cool thing is he's like, my emotions are minimal right now. I'm not doing those stupid actions anymore. I'm using this system. It's so less stress, and it's more rewarding. And you can imagine that, it's good from losing to now being up 22 or 43%. It is a lot more rewarding. And all of this is due to using systems that we've been talking about today. All right, so I said earlier, one of my jobs is to coach you and help you make a few shifts. Instead of choosing to just buy any day and hope, you need to use a system like the successful investor system that we've been talking about here to start buying at the right time so you can start to see that steady climb in your portfolio. That way you could start to average that 15% per year and using those signals of knowing when to enter. All right? So now we're going to talk about when to sell. And it's kind of the big one. Because now that you know the stocks that you want to be buying, what they look like, and kind of when to buy them, right? Like when to enter them. Perhaps the most important thing is to know how to sell them at the right time. This is the thing that most investors have the most trouble with. Because especially in situations like this, where you've got this stock, right? That's smooth and steady going higher. That's at resistance. And you're like, you know what? I'm going to follow the rules. It's at the rule. I'm following the rules, and boom, it's now cleared resistance. I'm going to buy it, and it goes higher, and you have a winner. But you don't know when to sell it, and the thing just goes against you, and it turns into a loser. A lot of times, those turn into the biggest losers that you've got because you just keep hoping that they're going to come back, and you start to suffer these big losses, and you're like, oh, man, I might as well hold it now. If you start to suffer big losses, it's so hard to recover because if you have, let's say, a 50% loser, that stock's got to go up 100% for you to get back to break even. If you start doing this over and over, that's when you start to feel like a failure, and you can't look at yourself in the mirror. You can't look at your wife, or if you're a woman, you can't look at your husband, and you just start to feel like a failure. What we got to get to is where you know your exits. Just like if you get on a plane, they tell you how to get off the plane before the plane even moves. All right. Now, in our full course that we teach, like I mentioned a few times, we have a full course called The Successful Investor. We actually spend about an hour or so just on this one topic. We have several selling rules that are built in. In the time that we've got here today, I want to give you two big ones that I think are going to help you immediately. Like you could walk away from today's webinar and be like, boom, these two are big ones that are going to help me. The two of them are, number one, I want you to set your line in the sand immediately. The first thing you got to do, set your line in the sand on every stock you own right now, and that should be the first thing that you do on any stock that you buy. Number two, if you have a profitable trade, never give back more than half your gains. And by the way, that's going to start once you're up about 10% on a trade, not just when you're up 1%. Let's look at a couple of trades from our portfolio as an example. Here's UVE. It looked great. We were super excited about this trade when we entered it because it was a nice smooth stock. It had rising earnings. It was hitting a new high, broke above resistance. Everything looked good. So we said, you know what? Here's our entry point. We're going to draw our line in the sand here. And a lot of people say, well, how do you draw your line in the sand? How do you pick that? Here at VectorVest, it's very simple for us because VectorVest calculates a stop price on every stock. That's what we use. Todd and I, when we're managing our portfolio, that is our line in the sand. Now, of course, as the trade progresses and moves forward, that line in the sand may change based on things that the stock does, which we don't have time to get into today. But we start off with our line in the sand at that VectorVest stop. It's based on a 13-week moving average, but it's adjusted for the company's fundamentals. So we've got this. So we get into the trade. We're like, oh, we're hoping for the big bucks, right? Because everything looked great. Well, after a couple of days, it went higher, but then it started to go lower, and like, oh, well, it'll start to move higher, but it didn't. Gap down, and then look at this big candle. It actually fell all the way down to here during the day, but we had our line in the sand set right here, and a line in the sand means boom, it's sold from your broker. The broker will say, ding, it's gone. So we had a 10% loss. Yeah, it stunk, but we had to move on to the next trade. A 10% loss is a lot better than like a 50% loss, where you get in at like 50 and it drops to 25. So having a line in the sand will protect you from suffering large losses. The second tip I want to give you today is the don't give back more than half rule. And this kicks in once you're up about 10% on a trade. Here's an example. We found this stock. It was in this nice uptrend here. We bought it here. It had this nice rally. I mean, this was, you can see here, we were in the trade for like 2 weeks. This thing exploded higher, which sometimes will happen, based on what we're doing here. You find these nice high momentum stocks sometimes, and you get in, you make this nice gain. We must have been up about 34% because it pulled back in a couple of days, and we sold it at 17%. Now, some people got on us because after the next week or two, the thing rebounded and started to go back up. And they're like, oh, man, you should never have sold it. Well, we're following rules, right? We're rule followers. We're not emotional traders. Well, we got back in over here. Why did we get back in? Because it met the buying criteria. It wasn't because we owned it before or because we felt bad because we sold it and it went higher. No, we said, hey, this stock looks like a good stock again. Earnings are rising. Everything was met. All that we already talked about. We got back in. We had a line in the sand somewhere down here. And look at this. One big down day. We sold it. We almost had a 9% gain. So that must have meant we were up about 18% at the peak. So we sold it. And what do you think we heard again? What do you think we heard again? Well, why are you selling it? Give it another day. Give it more time. It's going to go higher. Right? Well, it didn't. Knowing when to sell allows you to lock in those gains and minimize losses. You got to follow those rules. You don't want to be trading in the dark like Tim. Tim, he's another gentleman who took this training that you're going through and our full course, and he wrote to us and he said he was on target to do 30% that year. But he said prior to learning that system, he would buy what he thought were good stocks and hold them for as long as he could. But he never knew when they were losing momentum, and it was like trading in the dark. Right? He would hold on to trades too long, watch them go down, and he waited for them to just come back. He waited too long, and they never came back. After about 6 months, he said, he was on pace to make 30% that year on his stock trades. He's got the ability to make informed decisions, he said. Now, he is setting his stops just once a week. And you have that flexibility because it's a kind of a very prudent method that we're teaching here. Todd and I actually would say, hey, if you can, check it each night. That'd be ideal. Not that you have to spend hours every night, but a good little peek in is fine. But he's doing it once a week. But he always keeps a shopping list ready. And here's a key thing. He can sleep better at night with the stocks that you're in. All right. Let me ask you this. Do you know when you would sell your stocks? Like every stock that's in your portfolio right now. Yes or no? Every stock. Does it have a clear stop price right now? Do you have your line in the sand? Man, it's like mostly no's are coming in. I see one yes from Philip. Those of you who are saying yes, congratulations. But I'm seeing an awful lot of no's. And that's the thing. I want to help you make that shift because you got to go from not knowing when to sell and suffering those large losses to where you know your exits. And like I said, if we had more time, we could spend like an hour or so talking about when to sell. I gave you a couple of rules here today. All right, you got to be able to set up the trade the right way from the beginning and know where to set your stop so you minimize your losses and you can maximize your gains. Right? To be a successful investor, and this is critical, your system must include rules detailing when to sell. That's how you're going to average that 15% or more. And your system is the thing that determines your success. So let's check your system. I want you to grade your own system right now. I'm going to show you 5 things. Grade yourself. All right. Does your market signal reliably tell you the market's in an uptrend? Now, if you use VectorVest, hopefully you have a market signal like I described, a green light. You give yourself a check there. Now, if you're using VectorVest and you don't pay attention to the green light, then give yourself an X. Number 2 would be, are you finding those safe stocks that are rising in price with rising earnings all the time? All right, if it's not 100%, then it's not a check. Here's the other key question. How long is it taking you to do it? If your answer to that question is, well, it's taking more time than I want, then it's an X, right? You'd just be like, oh, that's an X. Do you know how to use stop prices? And are those stops helping you to protect profits and minimize losses? So the reason they're 2 separate questions is, I mean, you might know how to use stop prices, but are they helping? Are you using the wrong stop prices? All right, let me ask you. Those were 5 things. Give me on a 1 to 5 scale. What did you just learn? Are you 1 out of 5, 2 out of 5, 5 out of 5? Where are you? I see a 3, a 4, a 5 from Dan, David, and Paul. A 3 from Gregory. Gene 4, 2, 2, 3, 5, 4, 5. So a couple of you are 5, so nice work. All right, how about this? If you're anything less than 5, that's where we need to get to, because that's your system. You got to go from having no system to where you're using a system. That was a big shift for Rick, the system. Right? A system, because he was investing on his own, but he lost over and over because he told me, he's like, I did not know when to buy, I did not know what to buy or when to sell. You know what that means? He did not have a system. He said he would try mutual funds, but he would end up right back where he started a lot of times. He said he was tired of hoping and having no control, and he told me he was feeling helpless and hopeless. But he took the training, he took that full course that we were talking about, and he's now an investor who's in control and confident. He knows how to find those stocks and what to look for. He knows when to sell them and how to set his stops. In the first month, he was up 11.5%. One of the key things is he now has confidence and he feels in control of his future. So as you've seen, without the right system, you're probably sitting there buying only to see stocks drop right away. Maybe you feel like you're trading in the dark. You don't know what's good and what's bad. You feel like your account's kind of going nowhere. You're just spinning your wheels, or you're not growing as fast as you want. Today we outlined the basics of a system that you can use. And when you have that system working for you, you'll know exactly when is the right time to buy, what stocks you'll buy, and when to sell them, so that you can start to feel confident in yourself and have the ability to be self-sufficient. Right? And you'll know you're able to live a comfortable life and provide for the people you love. So the obvious question right now is, what do I do next? What do I do? You might say, how do I get results fast? Like, how do I start to get results as quickly as possible? What's the best way to install this system? Well, you have a couple of options, of course. Some people say, great webinar, Brian. I'll check you on the other side. And you leave and you try it on your own. You learn by trial and error. But my fear is that you might be in the same place this time next year, not getting the results that you want. My preferred option is option 2, which is you 100% commit to learning the system to become a successful, confident investor this year. Like Rick, like Kamel, like Tim, like Ross, and many, many others. That way you can consistently grow your account. So if you want to be in that position, I'm going to invite you to take that Successful Investor course. Right? It's called 6 Weeks to Steady Growth. Now, of course, you can go through it in a weekend if you wanted to, but we're going to guide you for the next 6 weeks through this course. Right? It is designed to take you step by step through the system that you need to safely and steadily grow your portfolio each year. And the outcome you will get from this course is a complete A to Z system which shows you how to grow your account and consistently average 15% per year or more. But I do want to say this, before you even think about jumping into this course, I want to say one thing. It is only for dedicated people who take their investing seriously and are willing to put in the time to learn the system. Right? If you're not serious about it, or you're not really committed to this, or you're just looking for some magic pill solution where you're going to become a millionaire tomorrow, then it's not for you. In fact, Todd and I would not even want you in the course with us, because we respect your time and your money and only want people who are taking it as seriously as we do. But by learning this system, you're going to learn a complete step-by-step A to Z system to consistently turn things around for yourself. The easiest way to explain it is just map it out for you. All right, I want to give you full understanding of this course. So in Module 1, we start out with our strategic game plan. We find that it is super important to begin with this, because you got to begin with the end in mind. We need to make sure to align your investing style with the overall targets, and the outcome you get here is clear goals and objectives. That way, you'll know what type of investor you've been and how to course correct if necessary. Module 2, it's all about when to buy. Right? It could be frustrating if you don't know what you're doing. Right? So we're not just going to say, hey, here's a green light. There's more to it than that. You've got to know the different phases of the market. Are we like in a bottoming phase, a trending phase, topping phase, explosive phase? There's a lot of different phases. You got to be able to identify those. All right. And then in Module 3, it's all about identifying the stocks to buy. This is important because a lot of people waste hours of their life digging through data, looking for their trades. And when they're done, they're still wondering if they picked a good stock. So the outcome from Module 3 is you're going to know how to quickly find and identify the best stocks for your trades. Module 4 is all about when to sell. And I told you today that I could only talk about 2 of the multiple criteria of knowing when to sell. Knowing when to sell is important because selling too early or too late can demoralize you, right? And it could devastate you financially sometimes. So the outcome here is you're going to know exactly when to sell a stock to minimize losses. You're going to know, hey, if this stock goes for me, what should I do? You're going to know. If the stock goes against you, you're going to know what to do. It's all rules-based. Module 5 is all about setting up your portfolio. You know, how many shares to buy, how to diversify, how to position size, how to manage your risk. And then in Module 6, it's time to put your system into action. We're going to give you an easy-to-follow daily ritual. You're going to be able to print out the checklist and go check, 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 and make sure you're following all the rules. So the outcome you get from this module is just complete confidence and peace of mind because you're going to know exactly how to implement the system. So by the time we're done with all these 6 modules, you're going to have that system that we talked about to get steady, consistent gains each year. Now, in addition to the course, we put together a few bonuses for you. But before I tell you about the bonuses, I do want to let you know it is a 100% money-back guarantee. Right? We believe beyond a shadow of a doubt that this course will get you results. So we offer a 100% money-back guarantee. Now, if you don't feel like your investment in this course is going to be returned to you many times over, while feeling so much more confident in your ability to buy and sell stocks, all you have to do is just show us that you did the work, and we'll give you a full refund. Because we know if you do the work, you will see the results, just like Kamel did, and Ross did, and Rick did, and so many others. So you have no risk taking the course. All right, here's some signs or some bonuses for you. How to protect and profit in down markets. Because a lot of people are worrying, oh man, is this market toppy right now? What if the market heads down? Well, we're going to teach you how to protect and grow your portfolio in down markets by giving you the 4 signs to become defensive, 2 ways to ensure your positions, and 3 ways to profit in those down markets. The next one is how you can start to eliminate even more human error and how to eliminate even more emotion, because we're going to teach you how to automate your trading plan. This is really where Kamel is right now. He's got his systems running on autopilot, and they just send him alerts on when he should trade the stock and sell the stock. All right. In addition to those 2 bonus modules, we want to, if for those of you who said you did not have access to VectorVest, instead of having you go out and buy a trial to VectorVest, we wanted to give you 60 days of access to it, because a lot of the people who are using VectorVest right now had a trial to VectorVest at one point or another. We want to give you that opportunity. So we're going to give you basically a trial to VectorVest during this course, and it's a 60-day access to intraday data. All right. We want to make sure you have access to it throughout the course, because we're going to use it in the course so we have a common platform to use. Otherwise, we're going to be like, oh, this broker, that broker, this broker. So we do feel it's the best tool out there, by the way, right? As it says there on the slide, it's the best tool out there to find and select stocks to help you become a successful investor. So we're going to show you how to become a successful investor in the course, and we're going to use this tool to help you get better results faster. Right? Whether you can decide to continue to use the tool after the course or not, I can guarantee you're going to become a more confident, successful investor for having taken this course. All right, using the tool is a way to make it a lot better, right? And get better results faster. All right, so also by registering today, a couple of my favorite bonuses are 6 live sessions. Like I said, you could go through the entire course this weekend because it's all pre-recorded. You could go through it right now as soon as you purchase it. But we're going to be there live with you for 6 sessions. Every Wednesday, we're going to get together with you. Same time as we got together today. Every Wednesday starting October 20th. So you have the next couple of weeks to go through the course and write down your questions. And we're going to start meeting with you every Wednesday for 6 weeks. Now, if you can't make it to one of those live sessions where we're going to help you implement what you learn, don't worry. You can call our team. You could ask questions. We're there to help. You could watch the recording. All right. In addition, we're going to invite you to our Thursday coaching session that we do at noon. That way, I mean, you could access and you can view our portfolio if you come to those sessions, and we're also going to give you the recordings of those, so that way you could see us implementing the system. So you can kind of be there with our clients. You know, we have paid clients who come see us every Thursday who are trying to implement the system on a week-by-week basis. And they come to those Thursday sessions to get help and ask questions. You could be there with them and ask questions yourself. Maybe the first couple of sessions be a fly on the wall, but you could be there and interact just like everybody else. So the total value is over $1,900. You get all these bonuses, right? So what does it cost? You know, is it one of those courses where you're like, oh man, is it going to be like $2,000 or $1,000 or what? The truth is, I mean, we probably should, because it's the results are life-changing that you're going to see for yourself. We want you to be able to enroll today and start getting results right away. Is it worth those prices? Definitely. But I'm going to show you a price here in just a second. And then I'm going to say, if you order while we're live, I'm going to give you an extra discount. So our special price for the next few days until Tuesday is going to be $295. Right? If you enroll today, we're going to put a link into the chat box. It's VectorVest.com/TSIC. But if you know this is right for you, instead of the $295, if you order while we're live on today's webinar, you get an additional $50 off. You get it for $245. That is lower than any elite pricing that we have here at VectorVest. So if you are an elite subscriber to VectorVest, this is even lower than your elite rate by a couple bucks. So it's $245. It's one of the best investments you'll make to become a successful investor. That means you're going to get the full course, 1 year of access to the course, 6 live sessions, additional Thursday coaching sessions with our paid coaching clients, access to the software if you don't already have it, the 2 bonus modules, and that $245 will only be for those who register before we finish up today. I will also note, some of you have taken this course before, if it's been over a year and you want to go through it again with us, we sent you an email and you can get it for only $95. We call it a refresher rate. So check your email, or you can just call our office and say you'd like to take advantage of the refresher rate. All right. If you haven't taken the course before, this is a killer deal, $245, best investment you'll make to become a successful investor. Go to VectorVest.com/TSIC. We put a link into the chat box. I asked people who have taken this course before what they would tell you about the course. John said, hey, this course, it will help you make better trades, reduce your losses, and you'll earn more profits with less time. Lucine says, just do it. The benefits are unbelievable on so many levels, financially, emotionally, and psychologically. Richie says, I've taken several other investment courses, and this one is among the easiest to implement and stay on track. Robert says, it's an excellent course and well worth the money you will spend and likely earn enough in your first trades to pay for the course. And Danny says, take the course and follow what it tells you. You will not regret it if you're serious about being successful. I mean, think about what's been your percentage gain over the last 12 months, 2 years, 3 years. Right? What's been your average gain? Then say, all right, what do I want it to be? And are you there? Like, are you where you want to be right now? And then here's the key question. Do you have a plan right now to get there? If you don't, ask yourself what it would cost you if you don't do this. You know, how much money will you lose in the market? How much time will you waste trying to figure this out on your own? If you keep doing the same thing, you'll get the same results. And then ask, you know, how would my life be different if I do this and it works? What if it does work? How would your life be different? Remember, the risk is all ours. You have a 100% money back guarantee. And I received this from Don about a week or two ago, maybe a couple weeks ago. It was one of the most amazing letters. Now, I couldn't put his entire letter into the slide here, but he said he had left investing for over a decade because his retirement plans at the time got ruined by Bernie Madoff. Recently, this summer, he decided to venture back and he decided he would make the decisions himself. So he went to places like Reddit, you know, and other message boards, and he's reading these message boards, and he came to the conclusion that those so-called experts on those boards were only hawking their own interests. He realized he knew little about finding and picking stocks. So he started to look into educating himself, and he started using VectorVest. That was one of the good things. He saw a post about VectorVest, and he went and downloaded the app. After taking our successful investor course, Don said he now has the utmost confidence to find, research, and set up his trades. And he said, most importantly, the best part is he knows when to get out of a trade, when to sell it. He said he went from a stagnant portfolio to where last month he was up 8.5%. All right, and now he's more financially sound. He has a more financially sound future as he heads deeper into retirement. So again, it's only $245. If you order before the webinar is over, you get that discount. It's lower than our elite price for this course, but you need to order before we wrap up today. In just a moment, I'm going to actually begin a Q&A session. But before I do, let me ask you, we got a bunch of people here right now. If you're in, tell me and tell Todd 2 words in the chat box. Just type in, I'm in. That way, I mean, we could welcome some people. You know, just type in, I'm in. And while you do, let me cover, just a couple of quick things. We're super excited about this. I mean, we only do this a few times a year. We know this transforms lives, not just financially. I mean, because financially is one thing. I mean, that's great, right? To make more money. But so many of the people that we talk to have a shift emotionally as well. I mean, like, it's almost like they become a different person, a better person. Like they feel so much more confident and in control. Do you remember I told you about Rick earlier? I asked him, I said, hey, Rick, and I interviewed him on Skype. And I was like, hey, Rick, how do you see that, what you know now changing your life in the future? And he's like, Brian, it's already started changing my life, because he was moving across the country and with his wife, and they were looking for another house. And he said he was able to plus up a little bit and get a little bit bigger of a house than he was originally looking for, because now he has that extra confidence and that flexibility because of that extra, the money that he had made, and he knows he's able to make in the future. All right. Now I see I'm seeing Eddie says I'm in. Ron is in. Ernest, welcome to all of you. Faye, welcome. Rajesh, those of you, everybody who's in, check your email, because the email will have have all the details. How to access the course, how to get in there, any dates of the live sessions. All right. Now, one of the things that we hear a lot from people is they're like, you know what? I don't know if I have enough time to do this. I'm still working. I got a lot going on. Or, can I do this myself? I've trusted some other people to manage my accounts for me. Well, one of our, hate this. Well, just like you can't have favorite children. I was going to say our favorite clients, but Carol, if you're here, she comes to our sessions, our coaching sessions every Thursday. It's like one of those sunshines that show up every Thursday, right? And so she shows up every Thursday still. And when she first started years ago, she would say, I don't know if I should do this. I don't got time. I'm working. And unfortunately, at the time, she was saying that her father had just passed away, and she was managing his estate, trying to work her own job, and she was just trying to juggle all these things. She's like, I don't know if I have time for this. Plus, she was paying a money manager, but she was upset because the money manager was only making 1% per year during a bull market. But she was still fearful of doing things wrong and losing money. So there's a lot of hesitancy there. But she was kind of glad she did. She took the course. She spent the time going through it. She dedicated the time, and she's like, you know what? I'm no longer afraid. I've had 60% winning trades. She's outperforming the money manager by 8 times, and she's got confidence. She's having fun again. And of course, it's a lot easier to have fun too when you're making money, right? All right, so again, go to VectorVest.com/TSIC. It's only $245 while we're live on today's webinar. Let me cover one more common question that I hear before I jump into the chat and answer the questions that are going to come in. It's like, hey, when are the sessions? What times are they? Well, here that I've circled or squared, outlined the live dates of the sessions. So you can see today is what? The 7th. You order today. You have immediate access to everything. You can start going through everything. You can watch everything over the weekend if you want, or you can split it up one module at a time. You can do all the homework assignments. You can answer the quiz questions. And you've got all this time to write down questions. And then we'll meet here on the 20th, and we'll have a focus on Module 1. Right? Module 2. Module 3, and so on. Now we shifted it to a Tuesday here because the markets are closed on this Thursday. So we had to shift our Thursday coaching to Wednesday and our Wednesday mastery session to Tuesday. So like I said, those are the mastery sessions, but we're also going to invite you to our Thursday coaching. So if you think about it, you're going to get 2 live sessions with us every single week for 6 weeks. We will make sure that you understand what's going on. All right. So again, go to VectorVest.com/TSIC. That stands for the Successful Investor Course. Registration will close on Tuesday. The bonuses will go away. The price goes up. You can't get a bunch of the stuff anymore. Todd and I only do this with people a few times a year. This happens to be one of them. Registration closes Tuesday at 5. Again, go to VectorVest.com/TSIC. If you have a question, type it into the chat now. Right? Even if you've typed it in already, my teammates, John and Todd, are doing a fantastic job of answering your question in the chat. If you have a question, I'm going to put a little flag on my screen now. That lets me know to anything that comes in after now is a question that I can help you with or that you need help with. All right. And by the way, Jeff says I'm in. Welcome to you, Jeff. Grace says I'm in. Welcome to both of you. If you're in and I did not call out your name, please just type in I'm in again. All right. So we already covered the dates and the times. Oh, by the way, if you miss one of those live sessions, don't worry, because all the things are recorded. All right, all the things are recorded. You can watch them anytime you want. You have a full year of access to all those things. Don't worry about it. All right. I see a question interested. We don't usually get this question from Rajesh. What about taxes? Can you teach us how to optimize those? No, we're not accountants. We are not going to give tax advice. I don't think you would want tax advice from a non-professional on taxes. We would recommend you talk to a tax professional. All right. Julie says, does the intraday also have pre-market data? I believe so. As long as it's not end of day data, you could check the box that says, and John or Todd, you can correct me if I'm wrong, but you can turn on after market hours. I believe it would still have that. They'll let me know if I'm saying something incorrectly in the chat. But if you know, Julie, your broker will have that data too. I mean, and I just want to clarify something here, Julie. One of the great things about what we're teaching you in this course is so that you don't have to sit there and stare at the computer all day. You don't have to be like, oh, what's happening? What's happening now before the market opens? What's happening at 2:00? I mean, you could relax a little bit. We'll even teach you in Module 6 how you could place trades where you don't have to watch the market open. It's like a buy stop limit order. We'll teach you what to look for, how to set it up. That way you could relax more, right? Ron says, is there a buy/sell platform you recommend? Not necessarily for this. Basically, any broker, you could do this. Because remember, we're not doing anything fancy. We're buying and selling stocks. Virtually all brokers now have a lot of the same types of tools to buy and sell stocks. You don't need like all the fancy like research platforms that they're going to try and get you to use. Pretty much any broker will work. Scott says, where do you sign up? Go to the link that's on your screen, vectorvest.com/TSIC. Scott, I'll actually walk you through it here. Let me pull up my handy dandy web browser. So if you go to, let's see, www.vectorvest.com and then put TSIC after it. You could also click the link in the chat. You'll see a page that looks like this. All right, you'll notice it says 2:45. Now it'll only say 2:45 for about the time that we're still live on today's webinar, and then that'll go away. And then all you have to do from there is click on Purchase Course Now. And then it thinks for a few moments. It'll most likely bring you to another screen where you have to click a button to purchase. Proceed to checkout. And then if you are already a VectorVest member, like you have a username and a password, then hit sign in. The only reason you should type in a first name, a last name, an email, a password, all this stuff down here is if you are brand new to VectorVest. All right, and then just hit submit, and then you just continue on. But that's how you do it, Scott. Let me know if you need more help. Looks like my teammates have done such a great job of answering questions in the chat. Let me scroll back because maybe some other people have some similar questions. Faye says, can I do this on my own time? Yeah, definitely. Everything's pre-recorded. So you could watch the recordings anytime you want. Watch them at midnight if you want. Now, our live sessions are only at predefined times. And those are the ones that you can just put in your calendar and say, all right, I got to show up at this time for the mastery session. Al Noor says, what date and time are the mastery sessions? Hopefully when I showed you the calendar up on the screen, Al Noor, that helped you out. Grace says, do you offer tailored weeding of a SAD portfolio? Well, I think you're going to be in good hands, Grace. Now, in today's webinar, remember, Grace, I was giving you examples from Steve. With Steve, at the time I said, we could not tell Steve, hey, Steve, go sell this stock. We are not financial advisors or registered professionals. We could help you just like we helped Steve by saying, hey, let's take a look at this and help you understand the rules of the system. But then the decision is going to be on you. But in the course, we will teach you what you need to be looking at to make those decisions. And then if you need more help with that, when you come to the mastery session or the Thursday coaching, be like, hey guys, I'm going through module 4 of the course on weeding my portfolio. I've got this stock. I bought it on this date. I'm trying to figure out if it should be something that I weed from my portfolio. Can you help me set my stop? And we'll pull it up and give you the best advice we can. And then the decision will be on you. But you are definitely in good hands. Sorry, I'm trying to grab a drink. It's out of my reach. I didn't put it close enough. Ernest. Let's see. So I typed www.vectorvest.com/TSIC and I get a message, oops, that page is not found. Do me a favor, just either try to type it again, click the link in the chat, or we actually had some people yesterday that all they did was refresh the page. Oh, Ernest. Ernest is like, that third time it worked. And Dennis, yeah, I do use it. I use these methods. So I got multiple accounts and I do multiple techniques. I use this technique in more of my, I have an account with where I can, what's it called? Self-directed 401k. So I use I use this technique with it's in a Schwab account, and it pulled back recently, but it got as high as in this past year, like 22%. But I think it pulled back, and I think it's right now for the year, it pulled back to about 10. But I kind of added one non-successful investor stock into the mix. So I bet if I took that one non-successful investor stock out, I'd be closer to the 15. But with this up and down year, I'm pretty satisfied with that, because there has not been, I mean, it's so hands off with that method. You're welcome. Faye says I just signed in. How do you get those little thumbs up? Are you on like a mobile device or something, Faye? Because I don't think it's not on like my keyboard to put the. Oh, okay. I'm trying to figure out how some people could put little emojis in the chat. Like, I don't know how you do that. Scott says I can't get past create account. All right, so Scott, can you do me a favor? Maybe if you are you able to call our office right now? That sometimes you might have to go on hold for like a minute. If we gave you the phone number, and by the way, we don't hide our phone number. You guys can call us anytime you want. We've got a great customer service. It's 888-658-7638, and someone on the phone could help you out. Because I'd hate for like technology to mess things up. But if you can call, and in the chat, by the way, let me know if you get straight through, or if you get put on hold. Usually hold times are like a minute, 2 minutes, something like that. Something would have to be like really off for it to be longer than that. But while I wait for Scott, we're about to wrap things up. Remember, the 245 goes away shortly after we finish up today's session. We'll probably leave it on for just a couple of minutes for people like Scott who are just trying to finish up their order. But remember, registration closes on Tuesday. The anticipation's killing me, Scott. I could always pull up my cell phone and try to call our number to see what hold position I'm put in. I don't want to jump in front of you, though. All right, well, folks, since I don't see any other questions coming in, I'll let Scott get through on the phone and give our team a call. But other than that, we look forward to having you in the class. Todd and I are here along with John. The three of us run the Successful Investor course here at VectorVest. We have fun doing it. We try to make it fun for you as well, but also not just fun. It's not just fun and games. We're trying to help you become better investors so that you can create a better retirement for yourself. All right, so we look forward to having you in class. First live session is in a couple of weeks, but you can get right into your course right now. And I hope you have a great weekend. All right, everybody, take care.